In the metals quadrant, the December gold futures have rallied for a third straight session, reaching the highest price level since November 14th. This was an entirely straight up session, as demonstrated by the low of 4106.70 being a gap higher from yesterday's settlement of about 0.3%, 0.31% to be exact. The high today, on the other hand, was 4156.30, which was up 1.52%. And with a little bit of time left in the future session, gold is still up right around 1% in the December contract. This is a holiday shortened week, but with only one full day of trading left, gold is already up 1.52% on the week. Part of that could be because of the reduced liquidity in a holiday week of trading. FOMC rate cut probabilities reached above 86% according to the CME FedWatch Tool, as Treasury yields also fell across the U.S. curve. On October 13th, the probability of that 25 basis point cut in December was over 96%. Early last week, it dropped to about 30%, and today it climbed back to just above 86%. Since higher rates are one of gold's biggest competitors for investors' capital, that kind of a swing in rate cut odds can act as a tailwind for gold, as we're likely seeing today. Additionally, risk assets like stocks are rallying, showing that this is a lower yields move in gold, not a flight to safety. U.S. Treasury yields have dropped between 1 basis point in the 2-year and 5 basis points in the 10-year, with the 10-year note yield falling below 4% for the first time since about October 28th. The dollar is lower while the yen and Swiss franc are stronger. That's typically a sign of flight to safety, yet stocks are higher across the board, and so are risk commodities like copper. That mix suggests that today's move in gold is being driven mainly by lower yields, not by financial stresses or geopolitical tension.